Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's Weekend Roundup. And wow, what a week. It was absolutely insane out there. I'll tell you, traders, I've been trading for 25 plus years, and I can't ever remember this sort of volatility in the summer in my life. We've had markets that have gone, well, the S&P, it went from 1510 to 1433, or let me do it a different way. It was at 1433, it went up to 1510 and tested 1433 and ended up back in the 1470s, all in a couple of days. In a couple of days. If there's anybody left out there that's still alive, congratulations. It was really tough to survive through. There were days that if you had a stop $14 away in the S&P, your stop was hit. There was nowhere you could hide. I think we won Monday and Tuesday. On Wednesday and Thursday, it was like, Oscar, boom, 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 boom. I got hit so many times, my face was blue. And then Friday, take it back Friday, we took some money back. We had a nice trade. But wow, what a tough week. I got some charts that we'll talk about. I'll show them to you. It involves moving averages. It involves a couple of things. Really nice stuff to look at. But I'd like to talk about a trade that we did in our premium room, and I sent it out on the Omni on Friday. It's called Scale Trade. It was a scale trade. It's actually a variation of what used to be very in vogue. There was this whole generation of what we call scale traders. And a scale trader would have orders in all the way up the line. Like, let's say they were in wheat, and they had an order to sell one at $6.15, and sell one at $6.20, and sell one at $6.25, and sell one at $6.30, all the way up to maybe $6.75. And how they would trade that is they would sell the first one, let's say at $6.15. And then it would come down to $6.10 or $6.05. They'd buy it back out. And when it went higher, they'd sell another one. And all the way up, as it came down, they would take one off and put one on. And this way, they sort of got into a scale on the way up. But every time there was profit, because no market goes straight up, markets go up and down a little and back up. So while they scaled on the way up, if it came down a little, they would take some profits and put them back out on the way up. And it was a really interesting and profitable way to trade grains for quite some time. Well, the laws of trading commodities have changed dramatically in the last 10 years, especially in the last 3 or 4 years. And I talk about bridging the gap all the time. Bridge the gap between the days of old when you called someone on the floor and they knew what was going on and they knew what reports were coming out and they knew what to expect and they could tell you what locals were and what big banks were doing. Well, all that is gone now. Most of it is gone. And now you have to sit at home and key punch these trades in and disseminate your own information and your own news. And our program, since we started, has been about bridging that gap for you. Well, times have changed to the point that scale trading just doesn't work anymore because of the fast-paced information that goes out to traders all over the world, and the reaction to that is so quick. Lots of markets trade like this, and you don't even get a chance to get a proper scale in before you're getting stopped out somewhere else. I put out a variation of that scale today. But one thing I want to say before we even talk about that, scale trading versus averaging. No, don't do it if you belong to the Omni Trading Academy. Averaging is out. We do not average here. It is voodoo. No averaging allowed. Now, what is the difference, you wonder, from what Oscar or Omni tried to do today by scaling into a position and averaging? Averaging, let's start with averaging. The no-no. It is taboo. And here's what averaging is. I sold 5 S&P at 15.15. I expected to get out at 15.05. The market goes to 15.20. I sell 5 more, hoping to get out somewhere in the middle. Then it goes to 15.25 and I sell 5 more. And now I have an average and the market goes a little higher. And when my stop gets hit, I've lost more money today than I've made in the last 6 months of trading because I averaged. And when you average, you're just praying to whatever it is that you believe in, whatever spirits or God that you believe in, to help you get out of a bad trade. That's averaging. That's not trading. That is not allowed if you would like to be a trader who will be here tomorrow to trade his account. So the difference is this. I knew the market, anticipated that the market would rally at some point today from the 1440s into the 1460s, maybe into the 1470s. But on a volatile week like we've seen, how do you know where? How do you know how high that rally is going to go? So I dusted off the old scale trade type of trading that I can do, but I used a variation of it. I said simple scale. Let's start selling S&Ps from 1466. We'll sell one contract. We'll sell another one at 1468. We'll sell a third one at 1470. We'll sell a fourth one at 1472. And if you're a trader who can handle 5 lots, you sell your fifth one up at 1474. Place your stops in the mid to high 1480s and stick around for the downside. I had to give a scale like that because there's just no way of pinpointing with exact accuracy like we could do on many other days how high momentum will take us, because this expanded volatility has had this market doing things you haven't seen in years. So to capture that, I put out a scale. In my premium room, we actually started that scale at 63. So we got 63s, we got 65s, we got one at 66 or maybe 67. And we got lucky and we rode them down into the 50s and covered. Then the scale happened again. I sent it out on an Omni. You traders seen it. Sell it 66, sell it 68, sell it 70, sell it 72, sell it 74. That is me establishing a position that I would like to have on. That has nothing to do with I sold one at 66. I was wrong. Let me try one at 68 so I can get out in the middle at 67. That would be averaging. We do not advocate averaging here at the Omni Trading Academy. I cannot say that enough times. Averaging, they say, has killed more traders than soldiers died in World War I and II. I mean, it is just not a way to trade. So traders, do not average, and do not ever mistake an Omni trade or an Oscar recommendation when I say scale into a position for averaging. Me and averaging never come together on a trading platform. It will not happen for me. That is one of my golden rules. I hope you guys are clear about that. Are you guys back there clear about it?
We're clear.
You understand the difference between averaging and scale trading and why you should never do this?
Absolutely.
Okay. I wanted to make sure that we understood that. There was also the 200-day moving average that came into play a lot this week. You traders who have been following me, you know that there is another of my golden Omni rules is that a market which is bullish and has settled consistently above a 200-day moving average does not turn bearish in my eyes unless you get a minimum of 3 settlements below the 200-day moving average. I have some charts now to illustrate that. Let's take a look at the charts and then we'll come back to you. Okay, traders, so this is a 200-day moving average overlaid on an S&P September daily bar. One of my major trading rules, as I had just mentioned, was that we need 3 settlements. 3, not 1 or 2, but minimum 3 settlements below a 200-day moving average before I can go from a bullish market, which we've had in the S&P for quite some time until recently, to a bearish posture. Now here, we've had this 200-day moving average cutting across the S&P for the last 7 to 10 days. We settled below it once, twice, settled above. We settled below it again once, twice, settled above. We got below it yesterday and settled again on Friday. That is 2 settlements below. 2. 1 more to go, and I am jumping the fence to the border, and I'm turning into a bear. It is getting really exciting for me. The only thing that could stop me is a Monday rally and a settlement above here. Barring that, we have put in this rounded top I've showed you many times. We're now below this huge band of resistance, and it looks to me like this market is going to head down. Major support here to be tested. We've gone to the 1433 level 3 or 4 times in the past 7 days. And I'll tell you what, it's getting really interesting on the downside here. Interestingly enough, on the Dow Jones cash daily chart, same rounded top, started bouncing off this resistance here, came down and tested support, broke through the support today but settled above it. It never even got close to its 200-day moving average. The Dow Jones has never even come close to hitting its 200-day yet. That will be extremely interesting if we can get down there. But we haven't gotten to it yet. It's at 12,819. If we can get to that level and get 3 settlements below that, oh my goodness, sell the farm and get yourself short. Until then, we're only going to get a test of that level. Okay, traders, bonds. U.S. 30-year bonds. We have something very, very interesting on the 30-year September bar daily. It put in a mirror image formation right here. Leg 1, leg 2. Then the third day it settled in the range of the mirror image. No signal. The fourth day it opened lower and dropped and settled below, thinking now we have a sell signal. And lo and behold, the next day it put in another mirror image right here. We have another mirror image. Same highs, same lows, almost opposite closes and opens. And now on Friday we settled in between, which is an inside day, no signal. What I can say is if we settle up here or down here on Friday, above 110 or below it looks to be about 108.20, we have a definite signal for at least 2 major days in either direction. Stay tuned for that. I've showed this to you many, many times. It is one of the most powerful indicators of our time. We also have a 200-day moving average right here. We've hit up against that and have cracked ever since. So likelihood is we will put in a downside signal. I cannot anticipate that. That would not be the way to trade the mirror image. You wait for the signal and then you trade the signal once it's given. Another example of a mirror image was put in coffee right here 2 days ago. Leg 1 and leg 2 are exactly the same, high and low, with opposite opens and closes. We settled higher on day 3. We settled this much higher on day 4. Out of the mirror image, 2 big days up. And look at this. We settled above, in Sep Coffee, above the 200-day moving average, off of a mirror image formation, and it looks like from here, this market is ready to blast off. Another market hovering around the 200-day, 3 settlements above that 200-day, and we will be taking off towards the upside. Keep your eyes peeled on the coffee market. Next up is wheat September daily bar. The wheat has had a fantastic run. It has held resistance all the way up this line. Then it started to get even more steep. It finally broke down through the support just on Friday, and it began to put in this channel right here. It looks like we will trade within this channel till we touch support at 648, and back up the wheat should go. The analysis looks really, really strong for wheat. We have an up arrow so long as we can hold support in the 648 area versus September. Same chart, September wheat, only this is a weekly. Look at how strong this weekly has been. It has hugged that support line all the way up. And let me tell you, a weekly chart is absolutely giving you the direction of the forest. These daily charts are the trees, and we try to figure out a path between the trees each day to get to the end of the forest. In this picture, this is the forest. And the forest is going up, up, up. Like the daily, however, we gapped open and rallied and then settled almost towards the low of that gap opening. I do not like gaps in a weekly chart. I have a feeling we are going to come back down. I did work on support, and guess where the support is? 648. Exact same support on the weekly as I found on the daily. My work tells me look for 648 in wheat and then put your buy shoes on and see what happens. I will keep you posted on that. Okay, traders, you've seen the charts. You see my reasoning. You see why that 200-day moving average is so important. Maybe next video I'll break out a whole bunch of charts that are long-term, and I'll show you how important the 200-day moving average is all across the lifetime of a commodity chart. In the beginning of a commodity's life, because it's a future contract, There are times where the 200-day moving average is useless because in the beginning of its life, it's being traded 6-8 months out and there is no volume, so you have to discount the beginning of a chart. Once it turns to most active, then you look at the 200-day moving average and how it acts around the most active month. So keep that in mind when you're looking at moving averages. Okay, so again, it's been such an exciting week. It's going to be even more exciting next week. Volatility alert again for next week. Half the camp thinks we're going to take off and rally. Another half of the camp thinks we're going for the downside. And you know, that's what makes a market. We love that sort of thought. However, I'm looking at what I showed you back here before, the 200-day moving averages. One more settlement below, and we're going short. I can't say that till it happens, but it is in the back of my mind. To be honest, I would love to see this thing just take off to the upside because I like a bull market better. But what you're seeing in the world right now and all of these funds that are sending out notices, letting their participants know that they're not allowed to withdraw money, at some point they have to do one of two things. They have to liquidate or they have to sell their positions at 50 cents on the dollar to another fund willing to assume the risk. Most likely, a lot of these funds are going to liquidate because what they have backing them is in real trouble in the world right now. So I don't think they're going to be purchased as we've seen with Amaranth and some other funds that were going down. This isn't just a bad position. This is being positioned in the wrong market. That is a problem. They're hedged incorrectly. They're getting knocked out of the game. They're going to have to liquidate. We got more downside coming most likely. All right. My premium room traders, you guys that have been in the premium room, has it been exciting or what? Again, we were up good Monday, Tuesday. You saw we needed these on Wednesday and Thursday because they were throwing punches at us like you have never seen. But we stood there with our dukes up. We withstood the battle, and we came out on Friday a winner. We had a couple of nice trades, and it's that way almost every day, certainly every week. We always find something good to trade. I would like for you guys to continue signing up to the room. It's getting filled up. The room has been fantastic. There are some really good traders out there. And speaking of which, a shout out to my buddies in Scotland. Hey, Omniacs from Scotland. Thank you so much for your participation. You guys are fantastic. Cheers. Have a pint on me. If I'm ever in your town, it's pints for everybody on Oscar. All right. So, again, with the premium room service, we are looking for traders who are actively going to trade their accounts, to move their accounts over to our firm. That gives you privileges to be in our premium trading room. In that room, there are cameras fixed on me with a live microphone. Every one of my thoughts while I'm doing analysis, the desktop is shared out to the traders in that room. You see my desktop. You share the analysis with me. You hear every Omni trade the second it comes out before I can even type it and send it out to anybody. You guys in the room hear the signals, and we get to react. It's been really great. I've had some great feedback. I'm really enjoying it in there. So come on down to my site, www.livewithoscar.com, and sign up for the premium room service. If you'd like to get the premium room free of charge, it is a perk that goes with opening up a VIP account with my trading firm. If you have an account with me and you want to trade it actively, you can move into the premium room free of charge. Get the gold omnis in their entirety sent to you in real time. And it's a really great place to learn. Ask the guys who are already in there. Come to our room because at the site we have two rooms. We have a public room and the premium room. And every day when I finish the premium room, I jump into the public room and I chat with my traders who are in there. So come to the site and check that out, and maybe it'll give you a bit of information. Maybe it'll push you towards trying out our premium room because I know you will like that. For you traders who can't be there all day, make sure you sign up for your Gold Member Flash updates to get my Omnis in real time, sent to you the moment I type them. We shoot them out, broadcasted to everybody, and they hit the Omni page. If you're a gold member, you get to see the Omni in its entirety. All right, I think I've said about all I need to say here. Remember that we are here to help you bridge the gap. If you are an emotional trader, if you are a trader who's been losing money, if you can't figure out which end is up, come on down, give us a call, 718-351-2266. We are here to help you traders. Last but not least, I have 181 videos on YouTube that look a lot like the one you're viewing now. If you don't know how you found this, if you were just searching on the web, go to my spot, www.youtube.com/futures analysts, and subscribe to my videos right there. If you'd like to leave feedback, please come to my site. There is a menu on the left side of my home page. It's got a feedback button. Click that button, type in some feedback. It will get put on the site homepage as well for you to view, and I will get an email so I can get back to you on that. All right, traders, I had a great week. I really enjoyed your company. We love having you. Please keep sending in those letters and come on down and keep joining our site. And our Omni Trading Academy is growing. And I must say the caliber of traders who have been signing up, surprising me that we have some real high caliber traders starting to join us now, mixing in with our novice traders. And you novice traders, you cannot get better information than what you're going to get from me and a group of other guys who have been around for 20 or 30 years. And they are starting to join us. So come join us so you can feed off that knowledge, because believe me, you need it to survive in this industry. All right? I will see you Sunday evening. And you know what I'm going to say next. Say this to yourselves every day, especially when you are going to trade. And you know what that is? Stops are in, emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.